Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced within trading range, with the buy side being a little bit more active and a bit more dominant above the 92.5 to 94.5 initial support. If we zoom out, we can see that even on the larger time frames, the market is trading within a range, with the range low being around 81 and the high being around oh 07 to oh 09 quarter. As far as the econ calendar goes, we had jobless claims out at 7:30 a.m. Central Time. That's already out of the way, and the rest of the day is fairly light. And then we have a bigger catalyst due tomorrow with the non-farm payroll report, the employment situation report. So the expectation is for the market to continue balancing within a range, and we're going to use the 92.5 to 94.5 area to establish very short-term directional bias. If the market continues to hold above the prior close and above the previous VPOC, that tells you that the buy side is still a bit more dominant here, even though the larger time frame is very neutral and very balanced. If you break below 92.5 to 94.5, that would signal a short-term bearish bias, and from there the market could go down to test the 85.75 to 87.75 and potentially 81 to 83. But overall, the idea is that there's not really any major catalyst on the calendar this morning. Volume is running fairly light, and then we have the employment report due tomorrow morning. So most likely we're going to end up with a relatively choppy session. Now that's the expectation, but now once the market opens, we have to see whether the real-time information we're getting supports that hypothesis. Because sometimes, even ahead of NFP, you do get some directional movement. So the plan and the expectation is that most likely the market's going to be relatively choppy, more or less two-sided, where even if we get a pullback, buyers can be active at the support zones, and even if we go higher, the sell side can be active at the resistance zones. But now, let's say if we open and the tick is completely below zero, the AD line is tanking, Russell starts breaking down, then of course we're going to focus more on short side, right? So even though the plan is expecting balance, we have to validate that idea with the signals that we get in real time, right? It's not simply a matter of putting together a plan and just blindly trading it. The real-time information you get should be confirming that plan, right? And it should be validating that trade plan. So that's going to be the context for today. Overall expectation is balanced market, so we're going to be more conservative on our trade location with the types of trades we take, focusing more on fading rather than going with breakouts. Now, that doesn't mean that you can't go long here. It just means that on the smaller time frames, instead of buying the market when it's already moved 5 or 7 points to the upside, or shorting it after it's already moved 5 or 7 points to the downside, it's going to be better to wait for a rotation and then get on board, unless you're just able to get on board very early in the move, right? So that's more of a tactic on how to get on board, even if the market is going directional. Because it's very balanced, you don't want to just buy it after the market's already moved, 5 or 8 points, because now it's going to be short-term exhausted. And when the market moves 5 or 8 points within a trading range or within a balance, typically that can be the end of that short-term move, and then you'll get a counter rotation. And if the market is directional, then that counter rotation is the one that can be used to get on board in direction of momentum. So I hope that just keeps you um, on the right side and helps you time the trade correctly, right? Because it's not simply a matter of defining direction, but the execution really matters, right? Especially when it comes to day trading, because the margin of error is very small. The stop loss that you're using is typically 2 points to 3 points. So that's your margin of error. So there is an element of precision here. If you get in too late, or it's kind of a sloppy entry where a 2 or 3 point stop is not really a proper stop, then it's not really going to matter. You could be right on the idea, but wrong on the execution and still take a loss. So keep that idea in mind. We're in a very balanced state, so we're going to be more conservative. We're going to be more selective. It doesn't make sense to be super aggressive on a day like today. Use initial support to establish your directional bias above 92.5 to 94.5. The buy side has edge, and then a breakout above 97.5 to 99.5 would confirm the buy side in control. From that point, 0.2 half to 0.3 half is a smaller inflection point. It's not really major resistance. And then the upside target above 97.5 to 99.5 would be the 05.5 to 07.5 area, at which point the sell side could step in, and that can limit the upside potential simply because we have non-farm due tomorrow, and it's unlikely that we're going to get a big directional breakout of the recent 6 to 7 day balance ahead of non-farm. And same idea applies to the downside. If you break below 92.50, you can go down 85.75 to 87.75. Sell side would be in short-term control, but the larger time frame would still be neutral. So responsive buyers can be active at the 85.75 to 87.75. Then the final objective on the downside would be 81 to 83, fill the gap at 83, and at that point the market can turn around and then just start balancing yet again, unless we're getting just clearly directional signals off the AD and the NYSE ticker showing you huge momentum one way or the other. The plan is going to be for a balanced market. So those are the main ideas heading into the open. Let's see how the market reacts to 92.5 to 94.5. That's going to be a big tell on which way this market's going. Be prepared for a move in either direction and take it from there.